Hi there, welcome to Kneppy Invest. Can you believe it? Only 4.5 months to go until the end of the financial year. I have that right there, March, April, May, June. Yeah, 4.5 months to go. It's really bizarre how time seems to go quicker and quicker as you get older, but I do understand the reasoning behind it. But in a way, I sort of wish time went slower and slower as you get older. Sort of like when you're not working, time seems to go much quicker when you are working. I wish it was completely reversed. But of course, if it was reversed, we'd probably hate when we weren't working, that sort of thing. Anyway, a bit of a deviation to my discussion on this portfolio update, looking at the performance of three of my portfolios that are using different strategies. I'll talk about those strategies I use in the next slide. 17th of February 2024. I was quite busy in the previous week. In fact, I sold out of 6 positions and I only bought 2 positions. So really active on the sell side, not quite as active on the buy side. Now, 2 of the positions I sold out of, I won't say it was for selling, but 2 of these companies, there was a takeover bid at a really nice premium. And my philosophy, when there is a takeover bid for a company I own and it's at a pretty good premium, take the profits. And there are reasonings or reasons I have that philosophy. So those 2 companies were Ansarada and Altium. I'm a little bit disappointed that there is a takeover bid for Altium because I think that company has massive potential over the next decade. And I sort of wish the management believed in themselves enough, believed not in themselves, but also the company enough to knock back this takeover bid. There might be reasons they have accepted it, but I think this is not the best for shareholders when you are thinking about the long term. There is potential. They're missing out on significant gains. Ansarada, I don't mind about takeover bid for that company, locking in profits for that company, Ansarada. The other 4 companies I sold out, 3 I took profits in, and 1 I took a small loss. The one I took a small loss was Whitehaven Coal. The share price was not going the direction I wanted, and my trigger to sell is when it's down about 10% and the chart looks pretty ugly, sell out of that position. So I want to stick to my plan, stick to my rules. The 3 companies I took profits, including Mass Group, took about 15 to 20% profit in that company. And simply, I don't have high conviction around that company. I just like the way the share price was trending. When the company did release their results, there was a little bit of pressure on the share price. Portions of the market didn't really like it, even though the underlying results looked really healthy, nice growth in revenue and profit. So just because there was a little bit of negative sentiment in the market, I decided to take profits in that company. Also took profits in Crisis Corporation, ticker C79. I am fairly bullish on the long-term future of that company. It was just the valuation, and the chart was looking a little bit weaker than it has been. And I think one of the reasons why the chart was looking a little bit weaker was because of a little bit of pressure on the company or the company's share price after the company released the most recent Appendix 4C. The valuation of Crisis Corporation was something like 600, 700 million, yet the company is not producing any cash flow just yet. But I think the long-term potential of that company is quite significant, and hopefully I could maybe buy in at significantly lower prices, particularly if sentiment turns quite nasty and quite negative. Doesn't mean it will, just if it does. And the other company I took profits in, and I wasn't absolutely happy I took profits in this company, Drone Shield, went up 50% since I bought, and I just decided to lock in those profits. Share price is around the same level I sold. And I have made this sort of mistake in the past where I have sold and taken profits after the share price of a company had run up significantly in a short period of time, and the share price kept on going up afterwards. Doesn't mean Drone Shield share price will do similar, but if Drone Shield share price does drop, say 20% from where it is now, about 71 cents, if I remember correctly, I can see myself buying back in another trading position. So those 4 companies I did sell out because there wasn't a takeover bid, were just trading positions. And the other 2 companies were either in my quality portfolio, Altium, or my small cap portfolio, Ansarada. I also bought 2 companies and put those into my technical portfolio. Also should mention, I actually did buy some NVIDIA. Can you believe it? I did a little bit of research on NVIDIA. I did a little bit of financial analysis on the company. I've always been thinking the company was significantly overvalued, but just based off the most recent quarterly report, the quarterly numbers, I think there is an argument, particularly the growth rate of the company. There is an argument that Nvidia is not overvalued. Now, if you go to, I think it's TradingView, it says the PE ratio of the company is 96. But if you include the most recent quarter results, and if you extrapolate those quarter results over the next 3 quarters, the PE ratio comes down to about 30 to 40. So based off the numbers I put in to my own machine, my make-believe machine, I think there is a possible scenario, a possible future where Nvidia is not overvalued at all. But if the share price does fall significantly from here, I will add to my position of this awesomely growing company. Now let's have a look at the performance of 3 of my portfolios versus the benchmarks. I'll talk about the 3 portfolios and the different strategies I use. So the 3 portfolios I have: quality, small caps, and technical. Quality is a traditional investing method that I think the majority of investors would be taught how to properly invest. Find really good quality companies, put money into those companies, hold it for as long as possible, and you will reap the benefits by watching your value in these companies compound over time. Now, the definition of quality is going to be different for everyone, and I would probably say there are a few companies in my quality portfolio that maybe don't belong there if I did analysis right now on those companies, including Nanosonics. Small caps is using a strategy I actually quite like, and that is finding companies that are quite small. In fact, you might say most of the companies I invest in or put into this portfolio are nano caps or micro caps. They wouldn't be classified as small caps. So if you look at the true definition of small caps, particularly if you look at the ASX or even the NASDAQ, a lot of those companies have market caps of between $1 billion and $2 billion. The companies I am talking about when I am discussing small caps, I'm talking about companies with a market cap below $100 million. So technically, or not technically, typically I'm looking for companies that are profitable. So not story stocks, profitable companies that have the potential to grow in the future and become much bigger. And the final portfolio I use, the technical portfolio, I use just technical analysis to find companies to buy and sell just by looking at charts. Now, when we compare the performance of my 3 portfolios, there is a clear winner. And this is making me think that possibly I should be spending more and more time on getting a better understanding on technical analysis, and I actually am doing that right now, and spend a little bit more time on my technical portfolio, because at this point in time, it's more than double the return since the start of the financial year versus my small cap portfolio and quality portfolio, up 34.3% since the start of financial year. Small cap portfolio up 16.7%, and quality portfolio up 13.9%. Now, I also included 3 benchmarks. Now, 2 of these benchmarks are ETFs that you can trade on the ASX, the NDQ, which is a NASDAQ 100, the STW, which is an ASX 200, and I've also included the XSO, which is the ASX Small Ords. So you can't really trade that because it's just an indice. And if you look at the performance of the 3 benchmarks, the NDQ up 21%, coming in second since the start of the financial year. So a really good strategy that maybe you can employ is just put most of your money into the NDQ. Now, some would say that's not a diversified strategy, but because there's 100 companies in the NDQ, and to be fair, a lot of those companies are high growth tech companies, you are in a way a little bit diversified, because if I have a look at my quality portfolio and most of the international companies within that, I'd say 75% of those companies would be tech companies that are listed either on the NASDAQ or the New York Stock Exchange. So a definite strategy is just putting most of your money into the NDQ. And then the XSO only up 5.6%. And the reason I use the XSO is I compare the XSO, or the small orderies, versus my small cap portfolio. And the small cap portfolio is absolutely killing the small orderies. In fact, it's about triple the returns of the small cap or ordinaries. And the STW, which is looking at the ASX 200, only up 9.2%. So just looking at the comparison of the three portfolios and the benchmarks, yeah, I should be spending more time on technical analysis. And to be honest with you, I don't mind doing that because I actually like looking at charts and that sort of thing. And I've also broken it down into 3 months performance, 1 month performance, and 1 week performance. Now, once you get to the 1 month, 1 week, and some might even argue 3 months, we're getting a little bit more noise. So the day-to-day variations, a lot of noise. And you can definitely see that when we look at the 1 week returns and we compare the 1 week returns for each video. So for instance, in the previous week, my quality portfolio was down 1.1%, the worst performing out of these six, and the best performing was a small cap portfolio. I'm pretty sure potentially my small cap portfolio was the worst performing out of these six last week. So up 2.6% in the previous week. But there is a trend when you look at the technical portfolio. In the past 3 months, up 21.4%, by far the best performing out of these six. In fact, almost double the next best performing, which is the NDQ. And in the past month, it is also the best performing out of these six, just slightly beating the NDQ. So there is similar performances over the past month, technical versus the NDQ, but my technical portfolio at this point in time is beating one of the best ETFs you can buy in terms of performance, which is the NDQ. So that's really all I'm going to talk about when it comes to the performance of my portfolios. Also, I talked about some acquisitions I made and some companies I sold. And the question I have moving forward is, should I spend more of my time on technical analysis? I actually did buy about 4 or 5 books a few months ago, and I'm actually reading through those books, and I actually am learning a lot. The other thing I should mention is I have made a plethora of mistakes since the start of the financial year when it comes to technical portfolio. I have made a slew of mistakes, and if I fix those mistakes, the performance of this particular portfolio probably would exceed 40%. And again, that makes me think I am better suited to charting or technical analysis versus just buying small caps and quality companies. So if you have any thoughts, any questions, just leave those in the comment section of this particular video. And otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.